Cramer. Welcome to Mad Money. Welcome to Cramerica. Friends, hey, I'm just trying to make a little bit of money here. My job is not just to entertain, but to put things in perspective, to do some teaching. That's what I'm doing tonight. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Ugly day if you own nothing but artificial intelligence companies. Normal, decent day if you own anything else. To which I say it's the revenge of the plain vanilla companies that got left by the wayside as the high-flying, soaring AI stocks moved into the stratosphere via parabolic. And that's how you wind up with a day where the Dow dips 246 points, S&P plunges 1.07, and the NASDAQ, filled with all AI stocks, just plummets 1.69%. With Broadcom stock collapsing after a good but poorly received quarter, we now have a true rout in the AI data center stocks. When you see this kind of rotation out of a red-hot sector into cold ones like the foods or the drugs, where even the worst food stock outperforms the best AI play, you must be mindful that moves like these are shocking to your fellow shareholders who don't know what a data center is, other than it's something that drives stocks higher that they own, or that they thought they owned, but they had to sell. These people are going to leave over the next 2 to 3 sessions. Yes, just give up because they can't take the pain.
The house of pain.
And then we might be able to circle back to the group. No matter what, though, I still believe in AI as the fourth industrial revolution, and I think most of these stocks will be worth buying once their valuations come down to less lofty levels. And, of course, I'm including NVIDIA, which people ask me about all the time. And I say the same thing. I say, own it, don't trade it. I'm not changing my tune. Now, with that in mind, what's the game plan for next week? Let's take a look. Now, this is a tricky week. Why? Because on Tuesday, we get something that we're used to seeing on the first Friday of every month. The Bureau of Labor Statistics non-farm payroll report. You know we've been flying blind for several months now, thanks to the stubborn the shutdown that just wouldn't end, remember? And that means there's been a lot of second-guessing of the Fed, right down to its latest quarter-point cut on Wednesday. A strong employment number will call into question the need for any additional rate cuts. It might end up being a 1-2 punch because the very next day, after we get those numbers, New York Fed President John Williams is going to comment. Now, he moved the rate. He moved a lot of the betting on a rate cut last time by being a little more dovish. And you better believe he'll talk about whether or not we need more rate cuts in face of the persistently high inflation that we have. That's all people are going to talk about, even if it overshadows the results from one of the biggest home builders, Lennar, which is later in the day. If the labor report is weak, that means the Fed can keep cutting. And if we're headed for lower rates, then Lennar is a buy. Actually, I got to tell you, other than Toll Brothers, I think I like Lennar second best. Now, let's go back and consider next Monday in light of today's miserable tech sell-off. What's really going on here? Well, we got a press report that said that Oracle is delaying some parts of its gigantic data center build-out. Now, Oracle refuted the report, but at this point, these AI stocks, many of them overbought for months, have taken a real header. As I told people at the monthly investing club meeting today, you have to get these stocks to settle down before you go near them. I always say to people, they tell you when they're done going down. It's when they start going back up. These positions are, but the positions are too big for many of these big investment funds and hedge funds. They can't get out all at once. There's just not enough of an aperture. That said, the bargains could be upon us. Maybe by this time next week. Stay tuned. Now, you have my blessing to buy some of these, say, Wednesday, and if you really want to own data center stocks. One of the names that's been crushed investment club stock is Corning, because it's working to displace copper wiring everywhere, and the data center is the legitimate ultimate copper background. That would be the one I would suggest to start with. Start small. We don't want to miss a possible rotation right back because of the news flow I'm anticipating from OpenAI next week, which is operating in code red mode and putting out a lot of cool things. I wouldn't pick Oracle. The reason why this move down was so emphatic is that people truly believe Oracle can't get access to the money it needs to continue its incredible build-out. The fact that management could issue a point-blank denial and it meant nothing to the stock, well, that's bad news for Oracle, not the rest of the sector. And that includes, by the way, Broadcom and NVIDIA, which were brought down at the same time. On Tuesday, we get some more macro numbers of retail sales, and I think they need to be weaker to justify more rate cuts. Since this is all anybody wants to talk about, the bulls need that drumbeat of negative news flow in order to be able to keep the rate cuts coming. Then on Wednesday morning, we hear from Jabil. Okay, now this is really important. This manufactures a lot of the infrastructure and hardware inside data centers. I expect this could be the data center turning point if we're going to get one. I think you need to listen to Jabil very closely because it can undo the negativity that was unleashed by the Oracle story. This could be a huge reversal as short sellers will be running rampant in the AI stocks on Monday and Tuesday, sensing they finally have a chance to bring them down. Now, lots of people have been wondering if the food stocks will ever catch a bid. And if they don't after this, I don't know what to say. We need to hear what General Mills is saying when it reports Wednesday morning. You want a litmus test for the group? What could be better than the maker of Cheerios, Lucky Charms, and Cinnamon Toast Crunch? With these, you alienate the Secretary of Health and Human Services. You're taking fire from the GLP-1 weight loss drugs, and you run back into a new generation of people in their early teens and early 20s. They're committed to eating healthy. Next up, I like Thursday. Almost all of the restaurant stocks have been horrendous because of the soaring price of beef, which just refuses to come down. But Darden's, Darden, well, it's anchored by Olive Garden, which has minimal beef exposure. The OG is crushing it, and so is the stock, at least over the past few weeks. Cintas, the uniform and safety equipment supplier, reports too. That's a terrific barometer of the mood of small business. After the close is the biggest night of the week when CNBC Investing Club position Nike reports and FedEx also issues its quarterly numbers. Now, I told people listening to the Club Call today that I think it's still too soon to make a big swing at Nike. I'm not doing that yet because the company was so messed up, much more than we thought. Before Elliott Hill came in, the new CEO, that was a year ago. But it's been that tough to turn around. I do like that we have the World Cup next year, a good showcase ahead. But it's the old inventory that I worry about. FedEx could be the star of the week. This company is the leanest it's ever been. The leanest. It's got furious growth of e-commerce going for it. No signs of abating there. FedEx could put up a monster set of numbers. That's how well run the company is. Finally, Friday, we have a bunch of good reads on a slew of different industries. Carnival Cruise will tell us about discretionary spending. You don't have to go on a cruise if you don't want to. Conagra Brands got a lot of stuff in their freezer case, can show it whether people are cooking at home in ever larger numbers. And Paychex handles the payouts of millions of individuals who work at small and medium-sized firms. We need every piece of data to keep on what's really happening as the money rotates from the Magnificent Seven to all these other different areas, kind of like a fire hose. Hey, by the way, do you think it's over for the seven? I don't. The bottom line, we're taking an Oracle Broadcom-inspired break, although I don't think anything's really wrong with Broadcom, and I'm not worried about its gross margins. That sell-off today was just plain out overdone, but an overdone sell-off doesn't end in one day. I have been worried about Oracle ever since it decided it was going all in on data centers. Didn't really get it. I always looked at it as a go big or go home initiative. And today I found myself thinking, you know what? Where exactly does Oracle live? What's its address? Because right now the street thinks it's going home. I need to speak to Dean in Florida. Dean.
Hey, Jim. Big Southwest Florida booyah and happy holidays.
Well, man, I'm a Knoll fan from way back to the times of T. Haas. What's going on?
Hey, I've got a managed care company that just raised its 2025 earnings guidance, even as it's trimming its Medicare Advantage membership and is raising premiums. Is this a trade for a 2026 rebound, or could it be a long-term core holding? I'm talking about UnitedHealth.
All right. I think that UnitedHealth has to be bought. I think that they've got a CEO who should come on the show. I think he's doing everything right. Obviously, they had big problems. But you know what? This is UnitedHealth. I've seen it come back from even an option scandal that was so horrible that a lot of people felt that it was never going to come back. I believed in it then. I believe in it now. There you go. Let's go to Alfred in the tremendous state of Mississippi. Alfred.
Hi, Jim. How's it going?
Alfred, it's going real well. How are you?
Good. Thanks for taking my call. I read your book, and it was a treasure of knowledge. I have a question
Oh, my
about
God.
Uber.
Thank you. Thank you very much. I like Faulkner, by the way, just for we go through state-by-state analysis. How can I help you?
I got a question about Uber. I've been reading where some money management said Waymo is eating Uber's lunch. I'm just wondering what's your opinion on it.
No, Uber's good. Uber's good. Look, as I say in the book, I think that Uber is not an expensive stock anymore. I really like it. 85. Let's see. Let's say you wanted to buy 100 shares. You buy 25 here. I would buy 25 at 80, and then I would buy 50 at 75. That may be the trajectory. I don't think it goes much below that. And thank you for the call. All right, next week brings a lot of good data. I'm hoping we can take a break from the Oracle Broadcom shakeout, but it'll probably still be with us when we come in on Monday, and some analysts who are cowards downgrade both of them because they can't take the pain. On Mad Money tonight, I'm taking a look at a different kind of bear market, a market for bears. I'm sitting down with the terrific CEO of Build-A-Bear Workshop to talk tariffs. Kidulting. Yeah, Kidulting. Hey, listen, I'm cool. OG, right? What does that mean? Okay, anyway, don't miss my exclusive. Then where do housing stocks stand? Stocks like RH, after the Fed's latest commentary. I'm digging into the company's latest quarter and telling you where I come down. And the Investing Club held our monthly meeting today. Oh, I wish you had been there. It was really fun. But the one questions I didn't get to, I'm going to come to do them right here. You kind of see like what the program's about. So stay with Kidulting. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.